So a very good evening once again to all our mentorship traders. It's 8:30 p.m. on a Wednesday evening, 22nd of April 20. And as always, I would take the opportunity to welcome all the new joinees to our program. Generally, the first 10-15 minutes, we talk about the index, the markets, few sectors and stocks. And then we move on to your doubts and questions pertaining to understanding of the strategies and trades that you have done. So I have here the triple screen of the Nifty. On my left-hand most chart is the daily, the middle one is the 75-minute, and the right one is the 15-minute chart. Now, bringing your attention to the daily chart first, or should I start with the monthly? Not much change. We did mention about these two channels, and we expect that the index will try its best to stay within the channel. So the long-term trend has definitely got damaged significantly. And we maintain the two important psychological levels of sub 8K and sub 7K. Sub 8K so far holds well. And according to us, the worst case scenario is the sub 7K. However, we are at 9,000 levels now. So let's talk about whether this bounce back will hold or not. Now coming back to the daily chart, you can clearly see that I have few Fibonacci drawns here. These are Fibonacci retracements and projections. And we can clearly see that the 38.2%, which comes close to that 93.90, is been acting as the current recent short-term source of resistance. Index had reacted from this resistance for 2 days, and today it was a beautiful sharp bounce back thanks to large cap stocks, especially Reliance Industries, and I should thank Mr. Mark Zuckerberg also. Now, if you notice on this daily chart, I have this falling channel which I've drawn using the RSI. Now, so far we have a breakout, and if you have been following my market views on the YouTube, I've been talking about that this breakout, if it has to fail, then Thursday's low, last Thursday's low of 88.20, let's say 8800, should not be touched or breached. The market so far is respecting that. And looking at today's close, it seems like it is trying its best to go back to this 38.2%, 9400 level. Possible, highly possible. But if I stretch this this move, this bounce back further ahead, further up, then I got a beautiful confluence of Fibonacci retracement and projection, which comes tad below the psychological 10K mark. So it is possible, and one should not completely discount it, that this move has the potential to go and test this 10K mark on the upside. It may not be sharp or one way, maybe, who knows. But if it sustains and holds well above the 9400 mark, then another 500 to 600 points rally on the upside eventually is very much likely. The momentum indicators are supporting really well. The momentum has picked up pretty nice. These are our triggers which helps us to buy. So this will not be useful for analysis, but overall it seems like the market is doing pretty good to sustain itself. So remember two levels: on the downside 8800, on the upside first 9400, and then we can look at a slightly higher 99 to the psychological 10,000 level. If you bring your attention to the 75-minute time frame, which is here, yeah, this is better. You can see that the index is essentially trading within this red color channel, this one. And it's been a beautiful bounce back today. And the channel top is close to 9,400, which is the previous high. And I feel that considering that the momentum in the lower time frames have also picked up, though a little stretched, it will ease off maybe at the beginning tomorrow and then try to continue the move that it did today. So what I'm trying to mean or imply is when I look into the intraday time frames, it's moved significantly for the most part of today's trade, since yesterday afternoon till today afternoon, 1.5 days of one-way rally, which might ease off, slow down a little bit, and then the next move will come. So look to buy, intraday traders, if you look at the 15-minute chart, look to buy on a dip, like these kind of 2-3 bar dips, utilize that. So staying bullish from the short-term perspective on the Nifty is our view. Let's take a look at the Bank Nifty. Well, the Bank Nifty has not done as well as the Nifty. Well, that's a very valid reason for that, because the majority of the participation from the today's gains has come from Reliance Industries. However, Bank Nifty, if you look at the daily chart, has given a move today, but it's yet to take out this falling channel, this gap, I'm sorry. This small falling gap is where it is facing resistances. If you look at the 75-minute time frame, you'll see that the bounce back has come, but the index needs to do far more. The main reason for this kind of an underperformance from the Bank Nifty is the group of 12 stocks are a little mixed. Few of them are showing strength, others are not been able to do that. We'll take a look into those. But this is the immediate channel that I have drawn in the 75-minute time frame. Supports coming close to that 18,900, 950 mark, and resistance are close to on the top 20,800. Considering that the benchmark Nifty is showing strength, you would expect that a catch-up game should come in from the Bank Nifty and its constituents. So let's take a look. Monday, Tuesday, and we finished Wednesday's trade. In these 3 days, which are the sectors which have underperformed or outperformed? So I'm running a quick 3-day rate of change on NSE all indices. And I can see here, in terms of the gainers, pharma, energy, FMCG, let's not call PSU banks much. So we are essentially looking at energy and pharma. Pharma, we've been clear about it, that it's been a complete turn on a dime. You would have seen that any intraday dip and sharp bounce backs from stocks like Sun Pharma or Aurobindo Pharma has been evident. Do not look to short these counters. I've been repetitively suggesting, requesting you not to short strong sectors, especially in this kind of a market. So I would say FMCG and pharma are your pockets of strength, defensives, especially FMCG, because if I open the sectoral index, this is the Nifty FMCG weekly chart. This is the monthly chart and this is the weekly chart. So you can see that the index is over here, and this was your all-time high, not far off from its all-time highs. If you compare that with pharma, you will see huge degree of underperformance from where it is today compared to its own all-time highs. Pharma topped out in 2015. FMCG hit a new high in 2019. So FMCG is relatively far more stronger than Nifty Pharma. So if someone is willing to buy stocks in your cash portfolio for medium to long term, and you want to dip it into the defensives. Just because pharma is doing exceptionally good now does not mean that it will do that in the next year or the next quarter. So please stick your neck out and stay with FMCG. Amongst the losers, it is metals. Mentorship traders, you'll remember in our Monday's live market class, I've been repetitively saying that the metals is something which is looking like short-term top out. So look to go short, and Jindal Steel was one of our picks, and it is so far playing out well. It is, yes, a pocket of weakness followed by private banks. Now this sector, this zone is a little volatile. We'll take a look into this. Bank Nifty, as I said some time back, auto, financial services. So banks, financial services, auto, anything that has to do with your rate of interest seems to be underperforming in this market environment. I'm going to quickly run this rate of change that we did for these different indexes or indices. We will take a look on Bank Nifty. These are the 12 stocks of which makes up the Bank Nifty, and we can clearly see RBL Bank down 17% in 3 days, followed by IndusInd, and there you go, ICICI Bank. Now, ICICI Bank, I had drawn a few Fibonacci studies, and it reacted from the 38.2%, come off sharply down to its previous lows. If this cluster of supports hold, then we have a chance back, or else this stock is still pulling the Bank Nifty down, followed by Axis Bank. HDFC Bank, the biggest weightage, is trying to do a good index management. So this is your mix-up. You can see the last 3 days, only and only HDFC Bank is positive. All 11 stocks are negative. This is a clear-cut sign of, I would say, trying to do some degree of index management. The biggest heavyweight, let's get a hold on that and don't let it crack. Don't let this stock fall, because if this falls, the others are anyways falling. It will damage a lot to the overall market. So if you want to trade banks, especially private sector banks, on the long side, I would say HDFC is something you should look to buy on a dip. Swing trade should be done on the 75-minute time frame, not on the daily time frame, because of the inherent volatile nature of these. One stock you should keep a watch on going forward is Kotak Bank. Kotak Bank is creating some kind of a symmetrical triangle, some kind of a coil. This falling highs and a bit of not so falling lows or rising lows is creating some kind of a coil, which is very, very evident on my momentum indicators. This guy is going to give us a breakout soon. Candlestick traders will find a bullish engulfing today. Divergence traders will probably start to see, I don't know, I'm not too sure if it's there. Would probably see a bit of 30, yeah, positive divergences. So keep a close watch at this counter. One of the best stocks to trade apart from ICICI Bank and HDFC Bank among the private sector space would be Kotak. So keep a watch on this. I think if the index has to go back to 9,400 and further up above that, banks have to do a catch-up game, and HDFC Kotak will play a role. Apart from that, few stocks that I would like to share my view quickly before I take up your doubts on question. Infosys. Now, I see a nice improvement of the underlying momentum of the stock. I see that the stock is buying time. It did give us a breakout, but it kind of failed. This was, I think, some kind of a event day. Now, if the breakout had to fail, it would have completely come down and it wouldn't have gone up today. And at Wednesday's close, today being the 22nd of April, we have an inside bar. So keep a close watch on this guy. This stock can also try to contribute if the market attempts a test of 9,400 on the upside. If, however, the Tuesday's low is very critical, 626, 625, is given away, then I don't think that the stock holds any chance to give this breakout on the upside. All right. So to sum it up, we are cautiously bullish on the Nifty. We expect 9400 and probable breakout above that towards that psychological 10K mark eventually, maybe not immediately. For that, the banks have to play a role because the banks have more than 30% weightage in the overall markets. The HDFC Bank seems to be the sole loaner, but the others like Kotak Bank and State Bank of India should catch up. We should not close today's analysis without talking about Reliance Industries. Exceptionally strong move today, triggered by a strong news of partnership. In terms of charts, we are back to the levels close to that 1400, where there can be some degree of resistance from these lows. Previous supports can act as resistances. If you allow me to quickly draw some projections just to check what is the potential of this move, has a potential close to that 1580 mark. That's quite a big move, but it will take some time for sure. That's taking the stock back to its life high, So it has the potential. For this, the stock should not dip below 1240, 1250 on the downside. Holding on to this gap is the critical thing now for the stock. It's a good sign. Right after Hindustan Unilever hitting a life high, in this bearish environment, an index heavyweight trying, and it has kind of recovered more than 50% of the fall, is a good sign. It's a very good sign that everything is not yet lost. So I hope the other large cap stocks like HDFC Bank, Larsen & Toubro, State Bank, ICICI Bank will try to pitch in and contribute. And if they do that, we will probably have a good recovery in our hands. Let's hope that. I'll conclude the market analysis here, and I'll open the floor for our membership traders to discuss and